If you think the Bank of Canada's recent rate cut is all sunshine and rainbows, you may want to think again. There's a lot more happening behind the scenes, and by the end of this video, you'll know why another rate cut is pretty much guaranteed and why that might not be as great as it sounds. Plus, there's one surprising risk ahead that no one's really talking about, and it could change everything. So stick around because you're not going to want to miss this. Hey everyone, welcome back to the channel. If you're new here, my name's Miles Noack of the Noack Mortgage Team, powered by Indy Mortgage, and I'm a mortgage broker here in Canada. Today, we're going to be diving deep into the Bank of Canada's recent move to cut interest rates by 50 basis points. So not your usual quarter point cut, but what everyone is calling a jumbo cut, and what it means for you. We'll also talk about what's likely to come next, including the possibility of another cut in December, and why that could affect more than just mortgage payments. So grab yourself a coffee, sit back, and let's dive into it. So what's the deal with a 50 basis point cut? The Bank of Canada isn't just throwing numbers around for fun. Inflation has fallen a lot faster and further than expected, even below the bank's target of 2%. This might sound great at first, but the bank's actually worried about the opposite problem now: deflation. And that's why they're pulling out the big gun. But there's more. We're seeing signs of rising unemployment, stagnating housing starts, and even a slowing rental market. The economy is giving mixed signals, and that's why the Bank of Canada has made this bold move. But here's the catch: this might just be the beginning. First, let's talk about why this cut happened and why another cut is basically on the horizon. Inflation is dropping fast, and we're not just talking about things getting cheaper. The problem with deflation, which the Bank of Canada wants to avoid, is that it makes people hold off on spending. Imagine you're eyeing up a new TV. Prices keep dropping, so you wait and you wait, thinking you'll get a better deal. That's great for you, but it's actually terrible for our economy. Businesses will start making less money, jobs will get cut, and the cycle will continue on. This is why the bank has made such an aggressive cut. And they're not done yet. Analysts expect another cut in December, maybe 25, maybe another 50 basis points. The aim is to kickstart spending to stimulate our economy and keep things from spiraling downward into a deflationary cycle. But here's where things get tricky. Lower rates don't always mean lower mortgage payments or lower prices. We've seen 5-year bond yields barely budge, which means fixed-rate mortgages haven't really moved. And if the Canadian dollar continues to weaken, imported goods like food and energy could get more expensive, pushing inflation back up in unexpected ways. And let's not forget about the housing supply. Housing starts are down 18% across Canada, with condo starts being down a staggering 30%. If new builds don't pick up, we're looking at long-term supply crunches that's going to put upward pressure on home prices once demand returns. But in the short term, the market's caught in a sort of strange limbo. Fewer homes being built, but people not quite ready to spend. Now, here's the kicker. Even if interest rates keep falling, it might not mean what you think. With new loan-to-income regulations coming into effect from OSFI, getting a mortgage is about to get tougher for those of us who might be more highly leveraged. Even if rates are lower, fewer people may actually qualify for the mortgages they need, especially in hot markets like Toronto, Vancouver, or Victoria. The new loan-to-income regulations being proposed by OSFI will limit the number of highly leveraged borrowers, meaning banks will only be able to issue a small percentage of mortgages to those whose mortgages are more than 4.5 times their annual income. For example, with the average income in Canada being roughly $65,000, a borrower would be limited to a mortgage of around $292,500. Yeah, that's a pretty small number. This move is intended to prevent another speculative bubble like the one we saw during previous housing booms, but it also means there's fewer people who will qualify for mortgages, especially in expensive markets like Vancouver, Toronto, and Victoria. While these may add some stability to the market, it could also make it harder for first-time homebuyers or those with lower incomes to enter the market, further contributing to the affordability challenges. Additionally, this could further increase the gap between your average homebuyer and wealthier Canadians. For more on this new rule and regulation proposed by OSFI, check out my next video where I go deep into what it means for you and how it can affect you buying a house or qualifying for a mortgage. So where does this leave us? The Bank of Canada is trying to strike a delicate balance. Cut rates to keep the economy going without letting things get out of control. Another cut in December is incredibly likely, probably around 25 basis points, maybe 50 basis points, depending on what happens. but it's not a magic bullet. We need to watch out for rising consumer debt, a shaky housing supply, and the ongoing risk of unemployment creeping higher. If you're thinking about buying, refinancing, or renting, now is the time to start staying informed and plan carefully. Lower rates are nice, but they come with their own sets of risks. The housing market isn't on a straight path to recovery. It's full of twists and turns, and I'm here so that hopefully we can navigate them together. If you found this breakdown helpful, please don't forget to give this video a thumbs up and subscribe to the channel for more updates like this. I'll keep a close eye on the Bank of Canada and all things related to housing, so hit that notification bell to make sure that you don't miss a thing. And as always, I'd love to hear your thoughts in the comments below. What do you think? Are these rate cuts a good move, or are we in for more trouble down the line? Let's talk about it together. Thanks for watching. I'll catch you on the next one.